So some time ago, I promised you guys I would keep you up to date with my investment performance. So in this video, not only are we going to go over all my investments, of course that's ETFs, if you don't know what that is, I'll explain that in a second, and peer-to-peer lending, same thing, if you don't know what that is, I'll explain that in a second. Going through the performance of all of those since I started them. Of course, this is a continuation of the peer-to-peer lending series, as well as my micro investing review video, where I mentioned I would be investing in Raise, Spaceship, and Comset Pocket App, so we'll be talking about the performance of those. But also, as well as just going over the performance of all my peer-to-peer lenders, all my ETFs, all my micro investing apps, and everything I'm invested in, I wanted to take this a step further and add an extra level of value to this video by actually going ahead and sharing with you guys why I invest in these things and my investment plan. Of course, because if you are a viewer of this channel, or you've seen our website, or you know much about myself, you know I am really quite obsessed with getting the most for the least amount of work. So of course, that when it comes to investments, that means getting the highest amount of return with the lowest amount of fees, the lowest amount of time, research. So obviously value investing, for example, is going to take a lot more time than passive investing, and there's many passive investment strategies, and these are all things we're going to discuss later, and I'll explain to you guys exactly why I do what I do, being someone who is so obsessed, so interested, and so dedicated to making sure I get the most from my money with the least amount of work. So again, as I keep saying, I can have more time to do all the other things I enjoy in life. Finance is certainly one of those things, but there's many other things. Alright guys, so that there is a bit of structure to this video, we're going to go ahead and start with my investment performance, starting with my peer-to-peer lenders. So I'm currently invested with 3 different platforms, and I'm in the process of investing with the 4th. We've had a little bit of issues there, but I'll talk about that when we get to it. And then I'll go ahead and talk about my ETFs / micro investing apps, given that all those micro investing apps do actually invest via ETFs or exchange traded funds. Once we do that, I'll actually go in and explain to you guys why I invest in what I'm investing, and also why I don't invest in a lot of other things. So why am I not invested in real estate, for example? Why am I not invested in bonds, for example? Alright guys, so starting with peer-to-peer lending, I'll just quickly say, if you haven't seen the first video for the sort of peer-to-peer lending series that I've made, that I've sort of mashed with my sort of investment series, so I'll just put them all together. Of course, I want to deliver value to you guys in a way that uses the least of your time, because again, that's all what I'm about, getting the most for the least amount of work. So if you check out that, it's titled, I invest in $20,000 live, and my returns for peer-to-peer lending. And basically the first investment platform is MoneySpot. So this is actually where I put $5,000 of that $20,000 I mentioned in that previous video, and that was published at the end of October. So since then, these have been my returns. In November, it returned 12.89%, which is really brilliant. Remembering, guys, that the market average for both property and the stock market over the last 150 years seems to be around 9.6%. In December of 2019, we had a bit of a high return at 12.93%. Again, really good returns. Now, without getting too off track, I will quickly mention that MoneySpot have been around since 2017, and they have returned about 12 to 13%, generally 12.5% and above since their inception, which is quite good. I'm not sponsored for this. I don't have an affiliate link for these guys or anything. As you guys know, I just mention what's good, and if it has an affiliate program, I'll use it. But if it's good, I'll tell you what's good. If it's not good, I'll tell you it's not good. If it has an affiliate program, if I make money from it, or if I'm sponsored or not, you guys will always get the truth, so don't worry about that. Let's jump onto the next platform. Do note, I don't have the January returns for MoneySpot yet because I haven't actually updated that on their system. They normally take a bit to update it, so I'll, of course, update you guys with the January information or returns for MoneySpot in the next video. Alright, so the next platform is True Pillars. So I've been investing with True Pillars since I was 18, so about 2 years now. So basically for November, it returned 10.1%. In December, it returned at 9.65%. Noting, guys, it does normally get around 14%, but I did get a default. Defaults are just part of the process, but of course, I'm still getting high returns with an overall average return of 12% since I began investing with them. And for January, I returned 12.65%, so a bit more of a higher return there as well. Alright, so with Ratesetter is always a bit easier because it's fixed, also known as a secured loan, so the rate actually doesn't change unlike these other platforms, unless of course if there is a default, but they do have what they call a provision fund for that. It's basically a few $1 million that they don't guarantee, but they'll try use to obviously give to investors that do have defaults. Now, I have been investing with Ratesetter again for 2 years since 2018 and haven't had any issues thus far. Of course, guys, as always, if you do want to start investing with Ratesetter, you can get a free $100 on your investment. This is actually why and how I started investing with Ratesetter. Not the only reason, but it was certainly an incentive. There's a link down below for that. It is a unique link. If you start using that link, you invest $1,000 AUD in the 3 or 5 year market, you will get that $100. Anyway, so basically, including the $100, my first year I got 18.8%. If you don't include that, I got 8.8%, and that was on a 1-year loan. Now, the rates have gone down a lot since then, of course. Interest rates have gone down. The platform has become more mature. There's a lot more investors, etc. So basically what that means is I returned 8.8%, not including that $100 in the first year, and this year so far I've returned 7.9%. Of course, guys, real quick, if you are new to this channel, we have a free ebook linked down below that explains how I make money from market research. So I'm up to about $5,000 so far that I've made from market research. Generally it pays anywhere from $50 to $100 for an hour of your time. Sometimes it can be a little less, sometimes a little more, but generally it fits within that range. So basically that free ebook is linked down below. You can download that off our website. Also linked down below is our Facebook, socials, website, a bunch of other things like that. You can check that out during the video at your leisure. Also, please do remember to subscribe if you're new. Hit the notification bell if you'd like to be notified when new videos come out so you don't miss any value that I'm hopefully providing to you. And please do hit like on the video. It means more people see the video, so the YouTube algorithm will be more likely to push it to other people, which then allows me to put more time and effort into making better quality videos for you. Alright, so jumping into my investments, let's start with Spaceship. So with Spaceship, I've currently got about $5,000 invested. Their rolling return is about at 36%, which is really, really crazy. I've made, with only $5,000 in there, noting I've only recently gotten to $5,000. I had $500 going in about weekly for obviously a number of weeks, and basically I'm at almost $400 returned in interest so far, which is really, really crazy actually. That's really good for such a small amount of money for such a short amount of time, and I'll have the figures up on the screen here. So I'm quite happy with Spaceship, and as I mentioned in my review of all 3 micro investing apps, which you can check out on that video yourself, and you can also sign up down below and we'll both get $5 should you sign up using that unique link, so you can make $5 on your investment straight away. You'll also be able to jump in and see all this sort of stuff. But as I mentioned in my other video that I referenced to earlier, the fees are quite good. So there's actually 0 fees on under $5,000, which is incredibly competitive. And then after that, you can check out the fees on that video. But even then, the fees are very, very competitive. Anyway, so as you can probably tell, it's a bit hard to work out your exact monthly returns on Spaceship because they don't offer all that sort of data. But basically, overall, it's actually really good. They do show their rolling sort of return over time, which is about 38%, as I mentioned, which is really, really good. I am a fan of what they're doing there, and if you want to know more about how that works, what that is, etc., please do check out that review video where I talk in detail about all the current micro investing apps in Australia, which of course are Raise, Spaceship, and the CommSec Pocket app. Now, speaking of Raise, let's jump into my review on that. So of course did put $1,000 in Raise before I spoke about it and reviewed it to give it a go myself. Now overall it's good. It's got good user interface, etc. And I know that's not what I'm here to talk about. I'm here to talk about the returns, which again are fine as if you like the ETF, because they're investing via ETFs or exchange traded funds, which is probably a good time for me to quickly explain that to anyone that doesn't know. I'll have it up on the screen. But all an exchange traded fund is a bunch of companies, normally from a certain industry or of a certain size or from a certain country, that sort of stuff, and they put them all together in order to diversify and reduce risk, or diversify and thereby reduce risk. Anyway, that's actually how all these micro investing apps work. They all invest via different ETFs. But basically, my issue with Raise is not only did I not really make money in that time, which is fine, at the time that is I had the $1,000 in there, but it was just their fees were too high. So look, I would have made money over time. That's how ETFs work. But it's just their fees are really, really high. So it's $2.50 a month, and I just couldn't really justify that, given sort of the amount of money that I was willing to put into it and returns that different platforms are giving and the other opportunities available. It's not terrible, and the fees aren't terrible, but they're just not as competitive as its competition, which is of course namely Spaceship and also CommSec Pocket app, which we'll jump into now. Alright, so jumping into the CommSec Pocket app, I am a fan of this app. I'm not particularly a fan of the ETF choices they have. Some of them are not the best, but there is one that I like, and that is of course IOZ, which is of course the ASX 200. So basically I originally had $1,000 in that, as you guys saw in that micro investing video where I showed you guys on my screen. I had $1,000 in each one of these. I've as mentioned put $5,000 now in Spaceship, but I've also actually put $18,000, so an extra $17,000 into the CommSec Pocket app, into IOZ over the last few months. So I've just sort of let that sort of come in. The returns have moved a lot, but that's the thing with these sorts of things. It's a bit more exciting to update you guys on the returns of the P2P lenders rather than ETFs, because look, ETFs are always going to go up and down with a general trend of up. That's the way that they work, and that's why I'm a big fan of them. And I'll get into that in a second, because of course the next thing I want to talk about is why I chose these particular investments. Just real quick, if you don't know what the ASX 200 is, it's the Australian Stock Exchange 200. So the top 200 companies on the Australian Stock Exchange. Again, that is an example of an ETF. IOZ is the ticker symbol, or the, what it's known by. So what that particular ETF is known by. Anyway, overall with CommSec Pocket App, it has been a good experience. I do like what they're doing. I like the user interface, etc. The only issue, guys, of course, is that I'm a particular fan of most of their ETFs. In fact, any of them rather than IOZ, which of course is just the ASX 200. Alright, so let's now jump into what I think is the more interesting part, which is why do I invest in these instruments and why do I not invest in things like property? Okay, so basically here is my logic on all of those things. My logic on why I don't invest in individual stocks, even though I used to. I picked 8 stocks using the value investing method, which is of course finding companies that you think are undervalued and you'll make money over time, not just from things like dividends and all that, but really from capital gains, from that company's value going up. And a good example of that is Tesla recently. That's just bloody shut up, pulled back a little now, but overall still up a crazy number. So basically the reason I use one of these passive investment strategies, which is ETFs, basically what that is that I've calculated my time spent, working on my business. In this case, of course, I've recently left my job, yields a higher return than it would spent researching companies in order to value invest. So when I used to value invest, when I picked those 8 companies, one of which did return 50% within, I think it was like 3 or 4 months, but you can check back on my previous videos for confirmation on that, or just comment down below and I'll find out for you, than it would invest it anywhere else. So that's basically the reason that I choose passive investment strategies. So that's the reason why I no longer value invest. That's the reason why I don't day trade or do any of those things, is basically I think that my time is better spent otherwise. So basically I think that my time is better spent otherwise. So that then leads me to passive investment strategies. So why ETFs, for example, over managed funds? Why ETFs over LICs or listed investment companies, or mutual funds, all those sorts of things? And the reason basically is based off all my research. ETFs not only have lower fees overall, but they also have slightly higher returns than any sort of managed fund. So that includes LICs, mutual funds, etc. So that's the reason why I invest in ETFs, is namely because it's passive, and also because it has been shown to have really good returns, at least in the times that they've existed for. I would also mention that I just don't enjoy researching the companies and all that much, and of course enjoyment is really important. You want to enjoy what you're doing. I enjoy running my online businesses. I enjoy running this YouTube channel quite a lot, so I'd rather be doing this and again, from my calculations, be making a higher return doing that anyway, than sort of researching those companies or doing any other sort of active investment method. Also, if you don't know, an active investment is just basically you're actively managing it, working on it, researching, etc. Passive are things like ETFs, where you just shove it in there and you forget about it. P2P lending, again, shove it in there. A bond, a high interest bank account, all those sorts of things where you don't have to be managing it. You don't have to get up every morning at 6 a.m. and check what the stock market's doing. Those sorts of investments. Bonds and term deposits. Why do I not invest in these? Basically, the returns are terrible. And I just can't justify doing it. There's a bank account in Australia at the moment, at least, that returns 3.15%, and many that return 2.5, 2.25%, etc. So if I want to have money making those sort of returns, I just chuck them in a high interest bank account, and they're the sort of returns that you get, at least in Australia at the moment, from term deposits. Likewise for bonds. Alright, so now let's look at property. Why do I not invest in property? Well, this one's a bit more complicated, and I'll make a whole video going in detail soon. But more or less, basically, there's good reasons for it. One, there's a lot of trouble that goes into it. There's a lot of work that has to go into it, etc., or a lot more money in order to get someone to manage it for you. So there's that. Next is the fact that it is a lot more high risk because you're taking leveraged debt. So basically the way that works is if you buy a $500,000 house and you put a $100,000 deposit on it, and the house valuation goes down to $300,000, you still owe the bank $400,000. You still owe the bank, the $500,000, the $100,000 you put in, so that gets taken off, but you still owe that money even if the valuation goes down. Now, of course, the opposite is true, and that's, I think, the reason why most people love property, is that if the property valuation goes to $1 million, you don't owe the bank $1 million. You still only owe them the $500,000 or the $400,000 after your $100,000 deposit, which is great, but it goes both ways, and I think a lot of people don't understand that. So there's that, and that's the reason why a lot of research has to go into it, and that does happen to people. But a bigger reason for me is the fact that I do plan on going overseas. I do plan on sort of expatriating, I suppose, and having property, from my understanding, and I've done a fair bit of research on this, is a really, really big tax burden. In fact, it may completely ruin any of my tax plans on going overseas, of course, doing everything legally. So basically, that's a big reason why I avoid property as well. Another one is just the fact it's not very liquid. So when it comes to liquidity, I like to have that. It doesn't have a lot of that. So that is a big reason as well. But I will make a video going into detail, going into a lot of depth, explaining everything step by step soon. So comment down below. Please do comment right now if that's something that you want to see, because it's something of part of the script written for, and I've been meaning to finish. So let me know if you want to see that. All right, so just to be clear, the reason I invest in ETFs is because they are passive and because they have been shown to have high returns and low fees over time. So why do I invest in peer-to-peer lending? So the reason I invest in peer-to-peer lending is basically because for the time that it's existed, even in a lot of other countries, to the UK, for example, Ratesetter has been around in the UK for quite some time now. It's been quite well. It's gone quite well. It's had really good returns, much higher than anywhere else has been returning in sort of this low interest market in the time that I've been, existing, in the time that I've been able to invest at least. So of course that is being 18 plus, and also it's just something, it's a bit of fun as well. So that's why I have such a small amount in it relative to my ETFs, relative to my stocks, etc. on things like eToro, which I'll get to in a second. So basically, it's just something that's got good returns for the time it's been around. It's got a good history, etc. Of course, it doesn't have a really long history. It's not proven over a long time, and that's why I don't put a huge amount of money in there, relative to at least my other investments. So of course, percentage-wise, it's a lot less than if I just say, I've got $25,000 invested in peer-to-peer lending. It sounds like a lot more, particularly for a 20-year-old. However, they are the main reasons that I like peer-to-peer lending. They also just offer really good bonuses and stuff. So like at the time when I started investing at 18, getting that $100 on a $1,000 investment, it's a big deal at any time, but particularly then it was a really big deal for me to just be able to get that money straight away on my investment. So that was a big incentive too. Again, if you want to get that $100, you can click the link down below for the Ratesetter deal. The terms and conditions will be linked down below too, and you can check that out. Feel free to ask any questions about that if you like. All right, so jumping into eToro. The reason I didn't cover eToro in my investment returns video is because I don't think I have enough data yet to cover that, but I will definitely get onto that soon. I might actually make that its own series, and you'll see why soon, particularly because of copy trading, which is a feature they offer, but we'll get into that soon. And basically, eToro does have a significant portion of my funds in that as well, just currently invested in ETFs. So I actually am invested in some overseas or US ETFs there, so not just the ASX 200, and that is of course VU, which is the S&P 500, and a few others as well. And the reasons for my choices in those is basically just to diversify myself into different markets, but again, namely, it's just the fact that the ETFs, they're proven ETFs, they're big, they've returned, great returns over time, with an average of about 10%, and basically that's exactly what I'm after, just a long-term passive investment that I can just let my money compound over time. I think a big thing as well that I sort of neglected to say earlier about property is that overall, people think property returns like crazy amounts, and look, it can because you're leveraging money, but it does still return that 9.6%. So it does return, actually, I think it might be a little bit less than the stock market over time. It was a little bit less, but nothing too significant. But again, those small percentage points compound over time. But the point is that yes, you do get that leveraged debt, but with that comes a lot more risk. Again, there's a tax burden, there's a time burden, and I'm not against property. These are just the reasons. Again, of course, that's all I'm doing in this video, is I'm just sharing the reasons that I do what I do, and the reasons I don't do the things that I don't do, etc. So that is another big reason that I don't invest in property. All right, so the last thing I'll mention is of course my super. So I put a lot of money into my super. By the way, if you guys are curious, the way I have that set up to invest is because I'm with Host Plus. I just have the most aggressive option available. That's just mostly stocks, and the reason for that is because I'm young and I have a lot of time. Basically, that means if I lost everything I had right now at 20, I could very easily and comfortably get myself set up again with time. So I'm very lucky in that sense because I've started so early. But basically, when it comes to actually why I put money in there, it's just tax advantages. That's the reason. So of course it's 15% tax for money, salary sacrificed or put into your super, up to your contributions cap, which at least for me is 25,000 AUD. And that's basically the reason that I put so much money into my super each year. And that's pretty much it on that. All right, so short of my banks, that is actually all the money that I have sort of invested at the moment, at least. I've got, a certain amount of money in banks that I'm funneling in. I besides my emergency fund, which I talk about a lot, which I will keep in an account always, in a high interest savings account in the case of an emergency. That means I don't have to liquidate any of my assets or investments and all those sorts of things, which are assets, but anyway, you get the point. Besides that, any money in my banks is slowly being funneled using dollar cost averaging, so that's putting a consistent amount, or at least an amount in consistent periods, periodically into the stock market or into my investments. So I'm dollar cost averaging into ETFs over time, no matter what, and of course just keeping my emergency fund. So there you go, guys. They are my returns on all my investments. They are the reasons I have those investments, at least in brief. And I hope this has helped. I hope you guys have some context. If you have any questions on any of this, feel free to ask down below.